Alright, good afternoon everyone. Today is Thursday, April 5th, 2012. I want to remind everyone, every one of our partners, there's a partners meeting tonight, 9 p.m. Eastern Time. Tomorrow morning I will open up the live trading room, though it won't be moderated, alright, because the markets are only open for a short period tomorrow. If you are in here on a free trial and you're at the end of your free trial, you want to become a partner, as Dwayne mentioned a little while ago, if you don't already have the email from me, you should already have it, but if you don't already have it, send us an email at support@cfrn.net and we'll get you the information you need to get into the partners meeting tonight. Alright, we have a lot of stuff to go over tonight, and I think it'll be an interesting meeting, again, as they usually are. If you have not taken the free trial, go to www.cfrn.net/apply. That's APPLY, and take the free trial. With that free trial, you get all of our indicators for 5 business days, and you get all the Daniels Trading charting platform and data feed. All right, and it's really awesome that you get all the data feeds. I mean, you're going to see. I'll show you probably 5 or 6 different markets right now in this recap that you'll see. You get all these data feeds for the same price, which is free. Alright, all you have to do is go sign up at www.cfrn.net/apply. Alright, no credit card needed, no information taken, just your name, email address, and we'll get you in there. Alright, now to expound a little bit on the MA1 that Dwayne had just shown to you before I came on here, I just threw our new slingshot indicator on here. Okay? But the thing that just jumps out at me, this is the first time I've ever looked at it on a 5-minute chart, but the idea is to have something that you can trade across all markets, all time frames. Okay? Just looking at this, you can see when there's divergences here and price closes on the other side of the MA1, well, price usually goes in that direction. You see that? The first clue was when this, which is the normal S3 cycle, moved up. That suggested that the move down was ending. All right. Then you had these divergences and the closes up above, the pull back down to the MA1, and up it went. All right. Bunch of different opportunities to enter into it here, and you can see right here. This is suggesting that the up move that just happened may be over right here. The way that this is going down, we have some divergences right in here. So it closed down below this MA1 on a 5-minute chart, would suggest further movement down. Okay, this is just a quick glance at it, just to take it one little step further. But I know Dwayne was just really trying to simplify things for you and just put the MA1 on there, show you a way to trade it. And we'll leave it at that. Okay? Alright. You know what, I think I'll just close that chart. Alright, now to get into the trades that we took this morning, let's do the results first. Okay, we are currently plus 12 ticks on gold, plus 12 ticks on soybeans, and minus 8 ticks on the Russell. Alright, we did have a Russell trade right at the end of the morning session that set up. Had I taken it, it was right here. Had I taken it right here, we'd have been plus a couple of ticks anyway on the Russell. Alright, but it did set up right there on the short side. And that was it. Alright. I don't know which one to do first. I think, you know what, Dwayne just went over the ES quite a bit, but I'll go over it a little bit more from 10,000 contract perspective of what we normally do in our live trading room. Okay? Now here this morning we had a bullish cross, and we would have been looking to buy right here on the first pullback down to the BBC. The cycle's in favor of the trade. Everything is going up. Everything looks great. But we had resistance dots right up above us, so we weren't going to trade into resistance. Okay, it dropped down, passed through the BBC just a little bit, and then it continued on up. One thing I noted this morning in the live trading room was we pierced a blue envelope right here, suggesting a 3 to 5 point move up from the level of the pierce in the direction of the envelope. Right? The envelope is blue, So we should go up 3 to 5, not 3 to 5, 5 to 6 points. Sorry, 5 to 6 points from 1393. From 1393, you would expect to see it get up to 1398. We almost got up there. We're 1397.25 right now. All right. Now from the pierce, it wasn't straight up. It went up a little bit, pulled back down, bounced off the BBC again for another attempt at 1398. Okay, 1398, 1399. From the 5-minute chart that we just looked at, it's suggesting that things are going to turn around right here at this weekly trading zone and possibly move all the way back down here to this one. Okay, that's just a little bit of information there, a little more information looking at the larger picture. Okay, so we didn't have any follow-up trades here on the 10,000 contract this morning. All right, this was during the break here where we had a bearish cross. We may have considered shorting right over here at the BBC had we been watching it, but it was during the break, and we did not even look at it. All right, that is the ES 10,000 contract. Let's see. Let's jump over here to the ES 7-minute for just a moment. I want to show you the gaps that we've had here lately. That was the gap from yesterday to today. Okay, pretty significant gap. This, the gap again from the day before yesterday to today. Again, pretty significant gap. Let's see. Oh, you know what? I don't have my questions up here. Eddie, the pullback to support around 1046. You show that as a high probability trade. Hang on a minute. Okay, sorry, I was just reading the questions. I don't mean to have blank spaces here inside the recap. I'll get to that in a few minutes already. Okay, pull back to support at around 1046. You show that as a high probability trade, and you're talking about on the ES, right? At 1046, right here. The pullback to the BBC, or not to the BBC, but to the weekly trading zone. Well, here's a couple of things. We're looking at it right here on the 7-minute chart. If we were to look at it on the 10,000 contract chart, we typically expect the weekly trading zones to hold. Okay? On the 10,000 contract, yep, I just jumped back over here. We typically expect the weekly trading zones to hold, so what you would look for after this, you could, I mean, there's a way that you can trade this, and I can show you how to do that. But you could just wait for the next long trade. Assuming that this is going to hold, just wait for the next long trade, which would have been right in here if you wanted to take it, regardless of the support and resistance, expecting it to get back up to the next zone up above us. Okay? Now, there's another way you can trade the weekly trading zones. This is courtesy of one of our partners. What he does is when he sees price approaching the weekly trading zone for the first time, he'll put an order on to buy here and an order on to buy here, and he'll put his stop 2 points beyond this one. Okay? And so 1386, your stop would have been down here at 1384. That almost stopped you out right there. It got down to 1384.25. But he puts in an order there and there, and if it fills and goes to the 2-point profit target, that's where he takes it. And if only one fills, he takes the other one off. But there is a way to do that. Okay. The pullback to the green dots, it pulled back, yeah, just about to the green dots right there. All right. Did that actually go down to 34? Or I don't have my tooltips on. Or did it go to 84.25? I mean 84.25. I don't know. Either way, it was bouncing off of the support dots. Now the support dots started right here. It was printed right there. Could you have taken that as a trade? Yes. No, you're talking about right here, right? Could you have taken that as a trade? Oops, not there. 1046 is what you're talking about. Over here. Okay. Now we're on the same page. All right. Could you have taken this? Well, we don't have the weekly trading zone right here. Sorry, I was over here on the weekly trading zone. We don't have the weekly trading zone right here. Is this a high probability trade? For me, it's not as high probability as the first pullback to the BBC. But when the market is approaching the weekly trading zone like it is right here, you you expect it to get there. You could see the market was moving up. You would expect it to get there. After this pierce of the envelope down here, we were looking for it to get up here, actually just a little higher. Okay, just a little higher than that. So if you had a bias, long would have been it. The place to enter on this, in my opinion, would have been when the market showed you that it was still going to continue going in that direction. It comes down here, hits the BBC. I don't think I would have been buying the BBC right here. You know, back here I would have bought the BBC. Up here, I'll wait for an up close, like this one, or this one. Right here, this was actually probably an up close. You can't tell because I have an indicator painting the bars, but I think that this right here was an up close. But an up close above the MA1 would have been the real signal for me that it was going to keep going up. Okay? Alright, Eddie? That's what I would have been looking at. Like right here, in the opposite direction. The down close below the MA1, right here. Now, we just looked at the 5-minute, and on the 5-minute it was suggesting that it was, you know, it had pretty much reached the top here and it was going to start moving down. So where's it going to go from here? Well, we don't know, but the weekly trading zone down below is here at 86.87 is a pretty likely scenario. Alright, it's got to break this support first. If it breaks through that support, then we should be good. Okay? Alright. Sorry, I got all mixed up early when I was looking over here. Alright, yeah, I'm happy to answer all the questions, even during the whole recap. Anyway, that was the ES. That was the ES this morning, guys. Now, let's go to the Russell. Alright, I took one trade on the Russell this morning, and I actually made a mistake taking the trade. I should have waited for the down close right here, but I jumped in because I had just noticed that it was doing, for the third time, it was starting to do anyway for the third time what it had done right here. Now, what I'm looking at here, and this is pretty congested. Let me blow it up a little bit so it's not as congested. Alright, what I'm looking at here is the MA1 getting down below the BBC, okay, and price pulling back up to the BBC, testing the BBC when you have bearish divergence down here on the slingshot, okay. When you have this bearish divergence on the slingshot between the green and the cycle, which is the red and blue line, you expect the BBC to hold. So wait for the down close and then enter short. Alright, it did it twice here. Wait for the down close and then enter short. On this one right here, on the third pullback up, I didn't wait for the down close and I got stopped out right there. That was my -8 ticks on the Russell, right there. Okay, and then it didn't have any other opportunities until right here. Okay, it had one right here. You had bullish divergence. You see the space between the green and the cycle, and it pulled down, tested the BBC, and had an up close right there. I pointed that out while it was happening in the live trading room, but I didn't want to take it because it's right in the middle of a weekly trading zone. Alright, and that, I don't trade in the middle of the trading zones. This one happened right at the end of the morning session, and I said it was coming together, but I didn't take it. This would have gotten me back my 8 ticks, at least right here. It pulled back up, tested the BBC. We had the divergence down here, so the down close, this bar right here, this close, is where you would have been looking to enter on this bar for the move down. Okay. Now it did it again, right here. This is the down close. This is the divergence. Right here. Okay. So the entry would have been here for the move down. And it moved all the way down here. Now, this arrow is going the wrong way. We have bullish divergence right here. And right here, it tested it. Now it's going right into a weekly trading zone. Again, I don't trade into the weekly trading zones. It looks like it's kind of stuck there right now. But it pulled back right here to the BBC with the bullish divergence. Tested it, closed up, so there was a move up right there. Okay, going right into the weekly trading zone. Anyway, the one trade that I did take on the Russell this morning was over here, and that was my losing trade. Okay. Now, let me slide that off to the side, and we'll bring this over. This is the YM. I didn't take any YM trades this morning. Okay, if I remember right, there was only one that's set up. Yeah, after the open, there was only one trade that set up, and it was right in here. Okay, this was the first pullback to the BBC after the bullish cross. First pullback to the BBC. You needed to have about 10 ticks risk on the trade. And you can see it moved all the way up there. Okay. We had a bearish cross right here. This is the first pullback after the bearish cross, and that one's still working itself out. If you had entered on that at 13,011, it had a drawdown to 13,019, so you would have had to have about 10 ticks risk on that one too. Dwayne had mentioned something about that was, I think, valuable for all the partners and anyone who's on the trial this morning. With the YM setting the stop at about 1.5 times the average true range is probably a wise thing. Okay, because with the YM, I like to keep my stops really small, because usually the BBC is just going to hold like it did right here, or it's not going to hold like it didn't right here. Okay, usually the BBC is going to hold or it's not going to hold. But if the average true range is a little bigger than, I like to use a 7-tick stop. But if the average true range is 7 ticks, well then you're more likely to get stopped out at 7 or 8 ticks, and then it's going to go in the direction you expect it to. Okay, but if the ATR, if you make your stop 1.5 times that, which would be about 10 or 11 ticks, then you can see that would have kept you in both of these trades that we had today on the YM, and that was a great point, Dwayne, this morning. Okay. Alright, let me slide that over. I didn't do anything on the NASDAQ or the 6E this morning. I don't even have a NASDAQ chart up right now because I was looking at soybeans, and I'll get to those in a minute here. Rodney, on the Russell chart, what was the setting of the green line? This one right here? Or the little step one? You know the BBC, right? Oh, and the slingshot. The green line is the 2. That's the fast. Okay, that's the fast on. I'll bring it back over and I'll show you. It's easier to show you. Alright, in the slingshot properties, S1, the S1 line is set to 2, and the S1 fast on right here, that's the green line. Set that to true. Okay. That is what I have there. And that was the same setting for the 5-minute ES that we looked at. It's the same setting that I have here, that I have here, that I have here, that I have here, that I have there. It's the same setting across all of them. Alright. And now you can see the ES is moving down, like we had anticipated. Alright. So what have I done so far? I've done the Russell, the ES, the YM. Now I'm going to do gold. Okay, on gold we're up 12 ticks. We were up 20-something ticks. I don't remember how many. And that's just on the trades that I managed to take this morning, guys. There were a ton of trades. There was a bunch of opportunity. I didn't win every trade, clearly. I had some losing trades because I was at 20-something and I'm now at 12. But I did win a bunch of them. All right. Now all I'm looking at right here on the Russell, I'm not on the Russell, but on the gold this morning was I was looking for these lines to all head down, all right, in the same direction, and then price to close underneath everything. You just get short. Same thing on the upside. All the lines head up, and price closes above everything, and you get long. Doesn't work every single time. You can see this one worked, and this one worked, and this one didn't. I didn't take that. This one worked. That one didn't. That one did. That one did. That one did. Though I got to break even on it. That one did work out. That one worked. That one worked. There was one right here that worked. There was one here and there. There was one here that... No, there wasn't one there. Sorry. There was one here that worked. One here that didn't work that I took. Here worked. There worked. I can go through this all day, but you can see the setup is pretty much the same. And this is the same thing. You can do this on the YM, you can do this on the ES, you can do this on the Russell, you can do it on soybeans, you can do it on gold, using the same exact setup, the same exact stuff. All right. Today, I showed it on the ES, I showed it on the YM, I did it on gold, I did it on the Russell, and I did it in the soybeans. Okay. You can see I was pointing down here where all the lines are heading in the same direction. At least I think that's what I was pointing at down here. And you get your closes on the other side. Like right over here, for instance, all the lines moved down, and there was a huge move down right there. All right. I think there used to be another. When I had the cycle on here, this would also show some divergence. All right. Let's just take off the lines that don't have any meaning, and the arrows don't have any meaning. I don't want to confuse anybody. Okay. But you can see when everything starts to point up and it closes above everything, it generally moves in that direction. Okay? More often than not, it's going to move in that direction. And that is what happened on gold this morning. We had quite a few trades on the gold. You can see all the yellow ones were trades that we actually took. Well, not these right here. This was after the ones inside this box right here I didn't do. But everything leading up to it that was yellow I did do in the live trading room. Now, just to make my point a little clearer, this is the 4-tick range on the ES, alright? I'm just going to apply the same exact thing to it. And when everything's going up, it moves up. When everything's going down, it moves down. Now, how big are these trades, you might ask? Here's 93.50 down to 91.75. So that was 7 ticks right there. What would your risk be on that, you ask? Up above the prior swing. 93.50 to 95 point and a half risk. Everything moves up right there. All the lines going up, and price just moved up. All right, and that was on the open. And this is the first time I've really looked at it on the ES 4-tick range. But, we have our typical 4-tick range setup that we use right here. But what I'm trying to show is that applying the same theory, the same logic, using the same indicators across different markets works. Okay? So you don't have to learn 100 setups, you just need to learn one. Over here on the YM, I know I have a YM 4-tick range. Here it is. Here's my YM 4-tick range. Now if I apply the same template, right here, there it is. All the lines moving down, which would have been right in here for the short. Over here, all the lines moving up, right in here, closes up above. I mean, obviously, you would have had to have some risk on here, 7 or 8 ticks. Right here, all the lines moving down. You can see the same thing works over here on the YM. All the lines moving up, all the lines moving down, all the lines moving up and down. Okay. Now let me slide that off, and so we've done gold, the Russell, the YM, the ES. Let's do soybeans. Alright, same logic. Same exact thing here in the soybeans. Looking for all the lines to move down, right here. Okay. Right there. They were all going down. You take the close down below everything up here, which was right there, for the short. All the lines moving up, which was right there. You take the close up above everything, which is right in here, for the long. Okay? Simple as that. It's done another one here, but the soybeans typically trade better between 10 and 12 Eastern time. in this period right here, from like right here to right here, is probably the best time to trade the soybeans. I know there's a lot of movement over here. That was from yesterday afternoon and last night. And the same logic applies, and it still worked. But you'd be waiting a long time between trades over here. Like entering this trade at 2015, 2015, so that's 8:15, and over here at 21:03, so 45 minutes later, it finally reaches a bottom. If that's okay with you, then that's okay. Could you use a slingshot on the YM500? Why, yes, I believe you can. I know you can, Frank. I actually have it on there. Okay. That's not the prettiest slingshot, though. That was one of the earlier versions, I think, so I need to clean that up a little bit. Hang on, let me just take that off of there if I can. View all active indicators, slingshot, remove, yes, close. Now just insert another one on there. Okay, it should be all set up by default. Okay, that's a little better. Okay, so all the lines moving up, price moving up. It's a little harder to discern on the 500 contract, but all the lines moving down right over here, price moving down. All the lines moving up in here, price moving up. All the lines moving down right in here. It moved down. It pulled back up a little bit first, but it did end up going back down. And another thing that you can look at here is the divergences, like this. Okay, if you have a test of the BBC, this is the same thing that I was looking at on the Russell. When price comes down to test the BBC right here, do you have divergence down here? Okay, when price tests it here, was there divergence? And price tested it here, there was still divergence. Okay, you can look at it that way. Right here when price tested it, the first time it tested it anyway, we had all this divergence. Let me slide that over a couple bars. Right there was the first test. Okay, and that's that's in the middle of the night. But when the day started over here, 7 o'clock, we have this area right here, right on top of weekly trading zone. But we also had all this divergence. Okay. Over here, this was the first pullback this morning. Right, and we had all that divergence right there. So you anticipate the BBC to hold. Now, wait for an up close. You would have been entering in over here instead of up here at the BBC. Like on all of these, if you waited for an up close, you would have been entering there. You would have been entering there. You would have been entering here on the short. Now it depends how you want to handle your risk with the trade. Okay, but yes, you can use it over there as well. All right. So let's see. I covered soybeans, YM, ES, gold, Russell. I think that's it. I think I've covered them all, guys. All right, I'm going to stop the recording here because this has turned out to be a long recording, and we want to be able to get it out there onto the website. All right. So again, we ended up plus 12 ticks gold, plus 12 ticks soybeans, minus 8 ticks Russell.